TheRationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Rational Investors Daily Brief. I don't know too much to talk about today, unfortunately, but it does look like the breadth indicator is coming along, doing its thing. We did put out a fun poll, although I don't know whether this is the most updated version. This is just the link that I had yesterday, asking everybody at TRI to help in the process of naming both the crypto index that we follow, the crypto top 30 index, which I think we should give a unique name to, and also the breadth indicator. What's a good name? Breadth maybe it's a little too generic, and also a lot of people are, I'm noticing, mysteriously coming up with their breadth indicators, although I don't even know whether they understand the concept of breadth. So we're going to try and come up with a fun name for TRI's breadth. So if you are a TRI member, I said that I was going to be mentioning this on a daily basis, so I'll be mentioning this constantly and over the next week or two, if we can get as many submissions as possible. Chris, I think, did you post the link in the lounge to that? Maybe you could also post the link to that form in the lounge.
Yep, just did. It's over there in the members lounge right now.
And the end result of all of this is we do have a really cool swag shop, merchandise shop, whatever you want to call it. And the winner of the naming conventions, there'll be two, one for the crypto top 30 index and one for the breadth indicator. You get your choice of a product from our swag shop. So hopefully that gives you some incentive to participate. We'd love to have your input and make this a real sort of community effort. With regard today, first thing out of the gate, I woke up to the news that China's imports unexpectedly rise. I suppose you could make the argument that part of the reason why, part of the sort of desired outcome of all of this, building out China into the 21st century, is they'd like to, I mean, I don't know whether they want to or not, or whether it was just all a big fraud to begin with. But the public message is they'd like to try and convert the Chinese economy from a command economy into a consumer-based economy and consumer-driven economy. I don't know. But one of the keys there is China needs to be importing more goods from overseas and not be so dependent on exports. So I suppose that's probably a good sign if you are a fan of China and you'd like to see China actually become this economic engine that guys like Ray Dalio and stuff are all jazzed about. I don't know whether his ultimate dream of China becoming the next hegemony is realistic or not, but anyway, we'll see what happens. Only time will tell. So woke up to that kind of data, so we'll just leave it at that. I did see Japan was down a chunk here earlier today. Looks like China also down just a little bit. Europe, kind of a soft environment overnight. The Americans market's catching a bit of a bid. And I hate to say it, but probably over the next 5-10 years, you're going to see the NASDAQ just continually outperform day after day after day. That's what happened all through the 1980s and the 1990s, and I don't see any reason why that's not going to happen now. So that was sort of how I started my day. We didn't have a heck of a lot of econs here coming out of North America today. If we just update this, you can see that actually it was kind of interesting. I'm not quite sure why, but if you do use this trading economics website, you have to be a little bit careful with this place because they mysteriously changed this UTC to -7. So when I was up with my trading partner doing the opening range trade here this morning, He was kind of like, "Are you sure those times are correct, Brian? I think they're off a bit." So anyway, just be careful if you use this site. I wasn't aware of that, but anyway. So as you can see, not a hell of a lot of econs here today, Tuesday, November 7th. We had imports and exports, and really, if the US economic engine is operating the way that the hegemony, the way that they want it to operate, then there should be more demand for US dollars from overseas consumers. And those overseas consumers are, sort of countries are constantly selling their products into the United States market. And if the hegemony is working correctly, you should see the US run a trade deficit consistently. Now, this isn't necessarily good for US citizens, but it is the way that they've set up the hegemony sort of system, as the US dollar is the backer of all these fiat currencies. So it's sort of business as usual. If anything, at the very peak of the insanity there 4 or 5 years ago, these numbers were, approaching like $1 trillion a year. Right now, if you annualize that deficit, that'd be about 600 billion, maybe 700 billion annually. Interesting how it did come out ticking a bit higher. So that actually is economically bullish, even though it's an absolutely horrific number, and it does mean that the dilution of the currency base continues, and it will continue. And interesting enough, through the whole past couple of years, I don't think that the Chinese have actually run a trade deficit. I think through all of the insanity, and I wouldn't even be surprised if we go to war with China, like the West goes to war, we'll still be running trade surplus or trade deficits with them, and they'll be running trade surpluses, which just goes to show how absolutely screwy this whole thing is. Like, if I'm not mistaken, I think Russia is still running trade surpluses, and they're literally financing what they're doing in Eastern Europe with our dollars. So go figure, eh? So anyway, there is your econs for the day. Not a hell of a lot. I suppose encouraging for China, as a good example of this, the way the hegemony system works. Although, man, I am hearing a lot of reports that China is literally being excluded from NATO conversations, from G8 conversations. China is not even being invited. And there was an interesting article I saw yesterday where Joe Biden sort of circled the allies and talked to France and talked to Germany and Great Britain and Australia and Japan, and he explicitly left out Canada from the conversation. So there you go, DMAC. There's a nice little rant for you. Told you, China, I actually think is a short. This place is a train wreck. Anyway, it is what it is. No point in wasting any more time talking about how wonderful this country is. Rest of the day, you have a bunch of Fed speakers. And what I did notice was a lot of head faking in the market. And our opening range trade got stopped out for a full loss today, which kind of sucks, but it's the way it goes. And I even noticed there was a cute little trade that sort of came on the heels of it. But if my opening range trade fails, then the rule I have is not allowed to compound losses. So I have to just close up shop for live money and put it away and come back again tomorrow. This was an interesting double bottom that had come in. Probably a really good lesson for all like the level oneers and stuff. I had even noted in my journal that the MACD histogram, this bullish momentum divergence, never did confirm through here. So this market was not in divergence. And then, I did have one horizontal support and resistance level. If we looked at like the higher time frames, you probably saw that off of here. So I had this horizontal support and resistance level. See, even on the 9 minute, it didn't come in. Because I'm a junkie and I always want to have a position on, just see what happens. I paper traded this and got stopped out for a full loss. So if anything, it's probably best that I didn't put any real money on the line. And interestingly enough, I even put in my journal, which I think is super, super important that you constantly are journaling. I was proud of myself for not breaking my trading rules. Opening range trade failed, so put the live money accounts away. Fine to go on paper trade, but I even noted there was no bullish MACD momentum divergence. So I was skeptical as to whether this double bottom was going to work, and sure enough, it got bitch slapped hard there. So good lesson, probably not really a valid setup, and what a big surprise, it didn't work. Didn't really do a hell of a lot of analysis on the rest of the market. One thing I did notice, and you can see on this daily gold contract, that's a pretty well-defined double top, if nothing else, but maybe even a head and shoulders top on the daily chart. And it's interesting. I think on the weekend show, I had talked about how this kind of looked fractally, and I was wondering whether maybe this was like a neckline test and it's going to fail. I don't know, but that looks very, very toppy in there. And if you look, and I had talked to you guys about this on the weekend show, like crude oil down $3 a barrel. Um, this crude oil, it is not a bull market. And I was actually quite surprised. If anything, I want to go back and find those Twitter tweets. There was some guy here that was just like, this is it. We're going straight to the moon. And then I did some chart analysis and posted chart and said, I don't think so. I think we're just going to go up and tag the low 90s and then roll over. And sure enough, holy crap. I mean, that's a weekly double top. What are we supposed to think if we ever see the market smiling at us? And now it's smiling at us on a weekly basis. This in itself actually should be very bearish for Canada itself. Because now, they had this whole housing industry as sort of the cornerstone for Canadian economic activity for the past 5-10 years, because it's the leader guys trying to destroy the commodities industry as a backbone of our society. And now, whatever support Canada did have from the commodities industry and the oil patch, that should be taken away now. And really, this is why the Canadian dollar did so poorly in the latter part of the 1980s and through the 1990s. And it got to like crisis point where the French speaking part of our country actually had a referendum to get the fuck out of this country and go off and be its own country. It had enough of this China. I mean, how well is the China kind of idea going to resonate in French-speaking Quebec? If anything, if you want a platform for separation and a referendum basis, it just we speak French, not Chinese. Thank you very much. So anyway, we'll see what happens. But I wouldn't be bullish of energy. That is an incredibly bearish looking chart. And you can even see momentum just looks horrific here. And also too, like this should be a warning sign to like all of the Middle East countries that have just been swimming in oil revenue forever. This is a major, major warning sign. But also too, and I think this is a good part that will resonate well with you, the most of this audience, is this should be very, very bullish for technology. And anything that's sort of an anti-cost of energy proxy. If purchasing managers don't need to spend money on fuel for trucks or, fuel for heating or electricity because the cost of energy is falling, then they pile that money into productivity. Does that translate into Bitcoin rallying substantially from here? I don't know. That's a tough one. But I would say definitely down the road, it should help the trend. And probably, one of the reasons why a lot of these altcoins, although you can clearly see, they're starting to look a bit heavy. And of course, anybody that's subscribed to the TRI site, you know exactly what our message over the past, few days has been. Don't be shocked if you see that crypto has to take a bit of a pause here. Stock market itself, generally speaking, I wouldn't say huge gains, like an eighth of a percent. That's not really that much. Nasdaq up three quarters of a percent. Okay. S&P 500 smush it all together. Looks like we just got a little double top sell signal there, and actually the energy market breaking down. That probably is moving with the market. You can see that the oil industry, the whole sector, is under immense pressure here today. So it's, I don't know whether it's necessarily I yeah, I'm not quite sure how you would interpret this, other than, believe it or not, the way that I'm interpreting this is that I think the Federal Reserve are just is they're basically just going to say, well, this is our new normal now. 4 or 5% short-term interest rates, which they say is restrictive. It's not, it's the new normal now. Seeing interest rates go back down to the historically low levels, I don't think you're going to see that. But anyway, sort of what we've had this V bottom off of the celestial lows there a week or two ago. Straight up, is that sustainable over time? Probably not. We need to see these things look like W's. You can see how back and forth, back and forth. So, if anything, it's probably positive for the transport sector that the energy market's is as weak as it is. We just need to see the transports calm down here and W out, and then we can justify the industrials moving higher. And probably a great proxy for that is FedEx. Is a good sort of proxy in the transport space, especially for this consumer-based economy. You can see the double top that is working here, and if you're a fan of guys like Colin and the Pump Chasers, you can see how we almost came down to that 38.2, 200 SMA. Is that, if this thing does end up Wing out here, then okay, we're good to go. But right now, it's still in correction mode, so I'm not really overly excited about the market right now. If anything, I like to use these Canadian banks as a proxy. They always say, as the Canadian banks go, so goes the market. These things were all just absolutely puking out here just a few days ago. That was into that celestial event window. They've had a nice dead cat bounce back into resistance. And now, of course, the question is, do we go and W out here and start a new bull leg? Yeah, I think the jury's still out right now, to be honest with you. Suppose just circle around. And actually, you know what? Just before we leave this conversation, probably the easiest way for you to see this is if we pull up the S&P 500 chart. I talked to you guys on the weekend about this. How I thought this thing probably wanted to look like some sort of inverted head and shoulders. So I still think that the US market is working its way up into this neckline level, which means, just on a percentage basis, where we are now up to the neckline, still see the US equity market move up a good solid 1% from where we are even now, or the better part of 1%. I guess 1% would be up there. But let's call it 0.5% to 0.75%, something like that. I could see the market work its way up into this level here. I might even say something along those lines. At the same time, too, this is the Wyckoff check of the original bottom. So, if this thing is really a top, and you notice, look, there's a cheeky little gap here on the futures. If this really is a bear, we're going to roll over at this gapping level. You can see the gap. They tried to fill it in. You see the market start to waffle and then roll back over, but we're nowhere near there right now. This is way too early to call that kind of talk. And I'd probably say, if you are looking for that stock market top, you can start to see the divs start to form. You can see that this is the RSI study. It is basically overbought. Be interesting to see whether Willie is stupid. Yes, Willie is officially stupid. So it's just a question of, do we see market structure come in here? You know what this is? This is exactly the same thing as Bitcoin. And that's probably a good sort of segue. We saw Bitcoin do exactly the same pattern where it popped up And, the momentum was really, really strong on the move up. Then we had to see the momentum wane. We have to see bearish divergence form. Now the market, they pushed the market to new highs. So they're doing that now. And then what this probably turns out into is some sort of fractal here. So boom, 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 boom. So if anything, what this means is we're probably a week or so ahead of any kind of top if this comes in. But we remember the entire fractal that developed on Bitcoin through this summer. Um, just because the fractal forms, that doesn't necessarily mean it has to break one way or the other. And what I would say is after this kind of consolidation period, maybe that gives the transports enough time to actually put in some sort of bottom. And I'm not going to predict which way this goes, but in essence, probably we need a bit of a consolidation here. And then whichever way we break, that's going to give us our next leg going forward. So if we finish off this free video with a quick boo at yield corn, weekly chart, you can kind of see that same sort of pattern on the weeklies. If we go down to the dailies, actually, well, we'll go with the daily. There is that similar type of fractally type pattern that I just showed you in the stock market. There is this straight up in MACD, and we kind of talked about this also too recently, that if you have a MACD and good learning material, if you guys are taking notes, right, that looks something along these lines, then what's probably going to happen is you're going to get a huge pop and then a massive crash on the other side. Does anybody remember me talking about that a week or so ago? And that's exactly what's happening here. So we got the huge pop straight up, and now we're getting the crash down the other side. It's like kind of cliche how cliche this is. So that's sort of what I see happening here, momentum wise. The interesting thing about it is that price is not really breaking in earnest. It's just the bullish momentum is bleeding out. You can see RSI's in divergence, and fans of RSI, first M. Let's see. I don't know. I don't want to spend a lot of time on this, but anybody who's followed me over the years, you know how this story goes. The first M stops the bull. Then the second M is actually your sell signal. And if the second M comes through the 50 line, it's going to be a doozy. So way up here at 75, that's not through the 50 level. 50 level is way down here. So I would call this a weak sell signal. It is a sell signal, but it's weak. And I'd actually even give these colors, but I'm not going to go into that in this free video. We're pretty much done with time here, right? What time is it? Yeah. So what I would just simply say is, yes, I think there is a sell pattern working, but thankfully, if you are a crypto bull, you can see the bears, they're just not showing up. There's no real sort of reason like, oh my God, here comes another scandal. Oh, here's another big bankruptcy. Oh, here's another big fraud. Or oh, here's a big government, shut this thing down, or throw these guys in jail, or that kind of thing. There's just no massive bearish news event. So as a result, you can see the selling's actually relatively tepid. And if you are a bull, that's a good sign. What you would like to see is this just bleed out all the momentum indicators. You can see Willie is a very much stupidly overbought. And if we go through and we have Sjord, our TRI CTO, on the call here today, and of course he's had just some absolutely incredible picks lately that have just gone zooming higher. I've been encouraging him to take some profits along the way. I think well, if you're interested, come and join the site for the after party show and pick his brain. Probably one of the smartest people, I think, in this whole crypto space. Would definitely, I mean, obviously Spirit was guiding us when they brought Stewart to me. They said, look, you're going to need a guy in this space that actually knows what the fuck he's doing. So, come and join TLI if you want the man. In fact, I'm almost at the point now where I'm kind of like, you know what? I just want to turn all this crypto shit over to these guys and just let them run all this crap. But Seward's going to own us all by the end of all this. Anyway, um, what I would just simply say is the technical picture here, it's giving you signs that this is not the time to be like uber insanely bullish, right? When it's down Wing out and washing out and stuff, that's the time to get uber bullish, not when the chart looks like this. So anyway, off the lower time frames for the traders and the junkies that like to flip this stuff, I actually think it's interesting how we had a bullish bot setup that did come in, and this is why you trade setups because your opinion don't really mean much. And yet, we actually have had a noticeable technical break. Like the Weekdays we're not exhibiting this kind of massive price momentum here. We're actually starting to potentially M out here, and you can even say that if we do actually start Ming out and the market starts smiling at us, then all hell's going to break loose. But you notice that this thing's just not breaking down. It keeps flashing, fractal cell signals, inside bars, haramis, whatever. But you can see the little bot setup is still positive. So go figure. Anyway, a really good example of it's a trader's life. You just don't know what's going to happen. I do like the idea that, if you are playing the altcoin space, and we'll just leave the free video off of this, we'll go into the after party and talk probably more in detail about this with good old Stuart. But you can see, I mean, there's a bit of red on the screen here. And a lot of these names have just gone straight up. I mean, there was one name that, oh, look at that. It's finally starting to show some weakness. This thing, and actually, what was really interesting about this is such a good example of trend lines, right? So all you do is just play connect the dots, boom, boom, and look at where the damn thing stopped, right on that damn trend line. I figured that we were going to run into major resistance around this fog and bomb in this area, but it shouldn't surprise you when you look at charts like this and you see Willie stupidly overbought and you see RSI. I mean, RSI very rarely ever gets up in the 90s. So that in itself should have been a major warning sign. So I get the feeling that, we're probably closer to the top in this little crypto rally than the bottom. And, if you did participate and you've had names move up substantially, pay yourself. I mean, this is why we do this stuff, right? I don't know whether you're ever going to pick the exact top or exact bottom, but if you did put yourself in harm's way and you did see the asset move up appreciably, this is the whole point of the banging out doubles. Is you don't want to just let these really good trades just slip through your fingers because I pretty much guarantee you that at some point down the road, this thing's going to do a reload zone and all that kind of talk. And then Brian will be back in down against the bottom ends of the range talking about, hey, now it's time to buy him back, blah, blah, blah. So, yeah, the writing's on the walls. When RSIs get up to 90s, will he get stupidly overbought? Just understand the context of what's going on. All right. I don't know whether that was of any value to you. I hope you got some value out of that. Slow and steady wins the race. PMA for the win. Let's go and listen to how wonderful life in Netherlands is right now. And yeah, let's get a piece of Dutch PMA pie for the rest of our day. All right. So I will talk to you later. What are you saying there, Stuart? Are you ready to do this thing, or do you want to bow out today?
No, I'm ready to do this. But yeah, let's bring some PMA.
There you go. So you can see he's all full of piss and vinegar and ready to go. All right. Have yourselves a great day, everybody. Slow and steady wins the race. Hopefully, we had plenty of rants there to fill DMAC's pail. And the most important thing, DMAC, for you is we have to be sure to interrupt Sjord every 5 seconds, right? That's what you want me to do? I think that's what he asked for. All right. Have yourselves a great day. All the best. And bye for now. Oh, and this stuff too, right? PMA for the win.